In this video, you will learn how to mark the opening session high and low, and how to use them for bounces or penetrations. You will also see how I scalp and average into entry, and how I scale out as well. Let's begin. The first trade we will look at is this breakout. Here, I'm going to scale into a breakout. I was kind of distracted, so I got in a bit late. I started with a 1 lot and wanted to scale to about 40 once I saw it was a momentum trade. From 2 lots, I quickly ran to 7 and then 12. Once we got closer to my level of interest, 30,000, I made sure to size up strongly. Here, I pretty much started buying up 5 lots at a time until I hit 27. I stayed naked without a stop, keeping an eye on the original entry point and level of breakout at 29940. My rhythmic risk manager stops me out at 500 to 1,000 in losses per account. QuantHour makes it very easy to manage trades and risk on screen. Here the game plan is to load up on a level we had mentioned earlier, 30,000. We wanted an explosive trade which we could exit quickly. Time to cash in and quickly scale out. My exit began with a 10-lot limit order, about 9 points higher than my entry. I held 17 and saw price fluctuate, so I sold another 10, which left me with only 7 micros to scale out of. From 7 lots to none, I was now flat. Perfect. Well, almost perfect. I wish I had held these lots longer as the price continued. Oh well, on to the next trade. An important strategy is controlling greed and our profits. For this reason, the next 2 trades I got into were tiny, only 1 to 2 micros. At this point, I saw I got out of the earlier trade on time as the wick, or bottom of the candle, touched our original stop zone of 29,956. This motivated me to stay small and protect the profits we had earned until this point. The candle structure confirmed my fear, volatility. I was quickly stopped out. On to the next trade. Both trades failed. Thankfully, I had the experience to keep it small and not at the same size as the power momentum trade. At this point, we start marking the opening range. We are 15 minutes into the open and have marked our 2 opening range levels. Notice them on the right pane of the chart. The top of the session was 30,059.25 and the low of the opening range was 29,909.00, if marking the first 15 minutes of the open. We can start seeing resistance form at the high of the levels we just marked. The market quickly fell from that price zone, and we awaited even further weakness before attacking the market. Here, again, I didn't want to be too greedy. I shorted 1 lot under our previous stop zone. It got picked up rather quickly. I then moved my stop up using QuantHour's fantastic on-screen tools. I wanted to give this candle more breathing room before closing the trade out with my green stop order on the chart. If you notice, I am also gauging my risk by using the great on-screen stop tool. This allows me to see how much I am risking on the trade, visually and with a total dollar amount. This is an excellent risk tool to use when you are unsure how much you are risking in an open trade. One of the many reasons I love using QuantHour. The trade starts to break down into profit zones. I could have been more aggressive on this trade, but at this point I had a good trading day so far. I moved my stop down and was hit into profit. This next trade is a small scalp that's set up nicely with the levels we had already marked. Remember our opening range, high and low? Well, here we are near the low, so my strategy is to use a bounce off of the low of the range to buy 1 lot and just try to add some more cash to the pile. Here is my entry, as close to the range low as possible. I am just patiently waiting for the trade to go as expected. Sooner than later, we pop another $40 to $50 in profit. I move my stop up to 820 to lock in a nice profit. My entry was 29,796.50. And my stop at this point was moved up towards profit to 808. I locked in 12 points and waited to lock in more. When I saw the opportunity, I quickly moved my stop to 29820 to finish the trade locking in 24 points. a nice addition of $48 to the pile. As you can see, I can move my stop up and down on the screen using Quantower. Futures are highly volatile and mostly unpredictable. You must be quick in moving stops. Today you have learned to mark the opening range and look for divergences away from it or penetrations into it. I hope this video was useful, and make sure to leave a like and subscribe. Tell us what you think in the comments. Until next time.